Hello Wolfpack, 37k is the last line of defense for the bulls. That is the major reversal point that they're looking at, and that is the last area, in my opinion, that the bullish argument holds any sustenance. Now, before we move on with the video any further, I'd like to make it clear to people who haven't watched my channel before that I have been selling and bearish and publicly bearish since 66k, officially declared this a bear market at 58k, and hence this video is referring simply to the bullish argument. I'm trying to get a view on what the other people are thinking, right? I'm trying to remain objective, and what I can see is that 37k is the last point we can possibly bounce on Bitcoin and form a new bull trend. Below 37k, it seems extremely unlikely that we will actually go upwards without touching the 200-week SMA. Okay, before we get into the rest of the video, my prediction on Bitcoin is that we will go downwards towards the 200-week SMA, which would be at around 24k to 26k, and we will be there by November to December, most likely within November to December, but possibly before that point. I've also made the case extensively in the past that in May, which is this month, we will begin to see a major correction on Bitcoin below 37k that will put us at around 30k by early June. However, all of this relies on 37k being lost, and there is a case to be made that I'm going to make in this video, right? That 37k could actually hold. So let's look into it. But before we do that, let's take a look at the BitGet Exchange for 30 seconds. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. First and foremost, Bitcoin has a bear flag formation. It has broken that bear flag formation to the downside, and we are coming towards the major kind of, so I don't know if it's major, but it is no doubt a support zone stemming from this dotted yellow line from two touches of January 24th and February 25th and trending upwards. That's at 37k currently, or just above 37k. That is the major uptrending line that Bitcoin needs to hold for support. Below that, there is no real support zone until 30k, that major support block at 30k that we tested in May to July 2021. So again, 37k is the critical region. Now, what is interesting about Bitcoin right now is that generally after a bear flag breakdown like we have seen, which is obviously a very bearish thing, we would see an immediate fall downwards. And although we have been falling downwards, we've been falling downwards in a structure that is typically bullish, right? A descending wedge formation typically leads to a break to the upside around 73% of the time. And so given a measured move from that descending wedge breakout, we can be targeting something like 40k or 44k, I should say. But the interesting thing about this that complicates it even further, and this kind of goes into the question that, you know, the daily chart is extremely complicated right now, is that we have a massive amount of resistance coming from the 50 SMA, Ichimoku Cloud, Gaussian Channel, bull market support band, 75 SMA, and 21 EMA, all stemming from 40k to 42.5k. Right? So although in the short term we have this bullish structure, and although the volume, if we brought it up, would show you something bullish as well, and although we also have a pending MACD cross, a bullish MACD cross, and a slight bullish divergence on the RSI, although all of these things are bullish, we've just broken down from a major bear flag formation, and we have basically every single critical resistance, dynamic resistance zone above us at around 42.5k, right? So that's the thing that confuses the daily chart so much. And this is why 37k is so critical. Because if we lose 37k, we're losing the descending wedge structure, right? We're losing that bullish opportunity for Bitcoin to bounce upwards towards 44k one more time. 37k is the line in the sand on the daily chart. And then moving on to something like the monthly chart, we can see this viewpoint really start to take hold. This is the 21 EMA on the monthly chart. And you might be thinking, well, the monthly chart's an interesting thing to look at. And it is, right? This is one of the most important uptrending levels of dynamic support at this point in time you will ever see on a monthly chart, right? I should just say moving averages. We can see that every time we lose this level, okay, and we've only lost it a few times. We lost it here in 2014. We saw a 60% correction. We lost it here in 2018. We saw a 50% correction. We lost it here in the COVID drop. We saw a 45% correction. right? We've only lost that level on 3 separate occasions. You can also see every time we break above it, we broke above it here in 2015, it triggered a bull market. We broke above it here in 2019, it triggered the mid-bear market bullish rally in 2019, which is a big thing if you guys were around in crypto. So we've only interacted with this line on 5 separate occasions throughout the entire, duration of Bitcoin's history. On 3 of those occasions, it led to extensive drops exceeding that of 40%. And on the other 2 occasions, it led to exponentially large rallies, right? So this is a major line that kind of almost triggers the massive moves for Bitcoin, whether it be up or down. And as you can see, over time, this thing has been tested for support on multiple occasions. It's a very strong support and resistance zone. Support here, resistance on 3 months in a row there. We had it holding for support for about 5 months here before losing support and dropping 50%. Support, and then also support for about 3 months or 4 months already, right? So we're coming to a point in which we need to make a decision regarding this 21 EMA. Where does it sit? Guess what? It sits at 37 to 38k currently, which lines up perfectly with the structure we need to be maintaining on the daily chart, the bullish descending wedge structure, which if we lose 37k, not only will we lose that bullish descending wedge structure, we will also be losing a 21 month EMA, which, if history has anything to say about it, will lead to an exponential drop on Bitcoin, in my opinion, taking us all the way down to the 200-week SMA, which is my prediction at 26 to 24k by November to December. So it is of utmost importance here that the bulls hold the 37k region. Looking more at the monthly chart, we can also see that, let me just move my camera out of the way so you guys can see it. The stochastic RSI has bottomed out, which is an indication that we might be bouncing here. However, the thing is, it's bottomed out on many occasions before, such as in 2014, when we still had to drop 50% from that price region. And in 2018, it was bottomed out as early as 8k, even though we only bottomed out at 3k. So it's not exactly the most reliable indicator on the monthly chart. Now, monthly, the RSI on the monthly is showing a pretty clear hidden bullish divergence. It's also showing 2 hidden bullish divergences, right? Something like that. 2 separate ones. But the thing is, it's also showing a massive bearish resistance line, which could be perceived as some sort of descending wedge formation, right? So if you saw it like that, you could say it's a descending wedge formation, which is bullish for the RSI. That's something we definitely need to be keeping an eye on. But at this point in time, it's a resistance line and a support line. And so it's not really giving us any clear conclusions. And you need to understand as well, the monthly chart is not exactly the best chart to be using when trying to predict price movements. We also saw a bearish monthly MACD cross, and so there's no real direct indication as what we will be doing next on the monthly chart, right? Sometimes the RSI doesn't respect market patterns in the same way that the price chart does. So I suppose that the main point I'm trying to get across in this video is that so long as Bitcoin holds 37k, the bullish argument is not in the worst possible position. As soon as Bitcoin loses 37k, the bullish argument becomes completely obsolete, right? Because we lose basically everything that's remaining for the bulls. If we lose 37k, you can say with basically 95% confidence that we're going down towards the mid 20k region. However, this, I can't say any other way, is a perfect reversal zone for Bitcoin. It is. It's a perfect reversal zone for Bitcoin. However, it's more complicated than that, unfortunately. And even though it's a good reversal zone for Bitcoin, even though it's the line in the sand we need to hold, I'm still not convinced enough to become bullish on Bitcoin. Why? Because I haven't seen any reaction from it. I've just seen the price lurk here. We need to see a reaction in order to break our bearish bias. We need to see this descending wedge break to the upside, and we need to see 47k taken. We need to see that 200-day SMA taken back for support, and then we can be bullish on Bitcoin. Again, if we break 47k, we break back within this bear flag structure, Bitcoin looks bullish. Until that point, it's all just speculation. It's not confirmed, and hence we have to stick with our original bearish argument. Let's get into some of the bearish evidence now, and I highly recommend you watch this part of the video if you're a bull. So the first major piece of bearish evidence is the 4-year cycle itself. Now, some people would be convinced that the 4-year cycle is over. I completely disagree with that, and this chart proves it to a point in which it can't be debated, right? The 4-year cycle is still very present, it's still very prominent, and it's still playing out perfectly. The November top played out exactly as the 4-year cycle would have predicted, okay? You can see the trend here is quite clear. If you read the color-coded boxes, you will understand there is a trend from bottom to bottom and bottom to bottom in both cycles of 1,400 days. The same with the top to top, and then from bottom to top to bottom to top, 1,064 days on both occurrences. And there's also more of a trend there. You can look into that yourself, pause the video and look at this chart here, and you'll be able to understand that quite perfectly. There is also a trend that Bitcoin bottoms out on the 200-week SMA. We've spent 15 months cumulatively on Bitcoin, I can't say that word, at the 200-week SMA throughout the entire lifespan of Bitcoin. So it's very well tested, and we've never closed a weekly candle below that out of the 15 months we've spent there. So again, we've spent 60 weeks at the 200-week SMA, and we've never closed even one weekly candle below it. It is the macro bottom indicator for Bitcoin, and the 4-year cycle suggests that that will be the bottom for this cycle on Bitcoin, and that will be happening, according to the 4-year cycle, around November to December. So let's see how that plays out. But as of right now, we've got no reason to believe that the 4-year cycle is not still prominent, it's not still present, and it's very clearly suggesting that November was in fact the top, and hence it's very clearly suggesting that it is a bear market. Now, moving into some evidence that suggests a kind of a drop that is actually more imminent, is first of all the weekly chart, where we have the 50-week SMA crossing under the 75-week SMA. Is generally a very bearish thing. You saw it in 2015, you saw it in 2018 on both occurrences. Bitcoin had just or was in the midst of dropping 50% from prices that it saw just months before. Now, the 50 and the 75 are going to be crossing in a similar fashion to what they did in 2018 and 2015 in about 1 to 2 weeks. And so hence, based off of that alone, we can suggest that, hey, maybe Bitcoin needs to see a major correction here, which would actually line up to the kind of on the fence state of the market currently, right? There needs to be a big move. Now, supporting that even further is the fact that the Bollinger Bands are tightening on the weekly chart. Let's try and bring them up here. I think I've deleted it, so I'll just bring it up 1 second. So you can see the Bollinger Bands on the weekly chart are having a squeeze, which represents compression, and generally you see compression before a big move to the upside or the downside. In this case, we're talking about the downside due to the indicators we're looking at here. Now, there is more evidence for a May correction here stemming from the Gaussian channel. You can see that the only times in Bitcoin's entire history, right, the entire history of Bitcoin, the only time the Gaussian channel has flipped red on the weekly chart is moments before a 50% correction in the 2015 bull market and the 2018 bull market. We can see that the Gaussian channel is going to be flipping red, and this is unavoidable, by the way, is going to be flipping red in about 1 to 2 weeks, lining up with more evidence of a May correction. On top of all of this, we have the MACD on the weekly chart. The MACD has flattened out in a similar fashion to what we saw in 2018. You can see we faked in for a bullish MACD cross here in 2018. It flattened out, and we saw a bearish cross, and we crashed down 50%. Okay, the same thing is happening here. We faked in for a MACD cross, and now we're actually seeing a bearish cross play out. When that next weekly candle closes, we'll have that confirmed or not, and that would, generally speaking, according to this other evidence, lead to a massive correction on Bitcoin. Moving onwards, we have even more evidence for a May correction here on Bitcoin, and this is stemming from the 3-day chart. Okay, so what we have on the 3-day chart is a trend revolving around the 50 SMA and the 200 SMA. You can see every time we've seen a def cross, which is when the 50 crosses underneath the 200, on the 3-day chart here, we see that 50% correction we were just talking about on the weekly chart play out only moments after. We saw it in 2015, we saw it in 2018, and guess what? We're going to be seeing it in about 1 week on Bitcoin. Again, there is 1 week until we see a def cross on the 3-day chart on Bitcoin. The only other times we've ever seen this def cross is before a 50% correction to 40% correction. Now, what you'll notice is that the 200 SMA, which is the line we need to break back over in order to, do our best to avoid this def cross, is at 40K currently. Where is 40K on the daily chart? 40K is a break back into the bear flag formation. All of these charts are connected, right? There's nothing about these charts that doesn't scream connected. And so even though we have this kind of, optimal reversal zone, I would argue that a reversal is still very unlikely on Bitcoin. Okay, moving on, we have even more evidence to suggest that a reversal is unlikely, even though we are primed for it. Okay, so this is the total cryptocurrency market cap chart. This chart measures every single dollar invested in cryptocurrency, whether it be Bitcoin or altcoins, and you can see that current valuation is 1.71 trillion. This had a major uptrending line stemming from December 2020 all the way through the bull market. That was like the bull market support line for this chart here. We've recently lost that line. We've actually come up from a downside, lost it, and actually rejected off of it, and we can expect a price movement downwards based off of that resistance support flip. Now, you could argue that it's quite hard to draw this line because it's not exactly the neatest line you can draw. However, I would argue I've drawn it correctly here, and I would argue that's a downside break due to the strength of the break to the downside and how many times it's been tested perfectly for support. That is a downside break on the total cryptocurrency market cap as well, which is adding to the evidence for a May correction, because when you see a resistance support flip, you generally see that downtrend accelerate. So, again, we have evidence here to suggest that Bitcoin needs to hold 37K, and if it does, and if it bounces past 42.5K after holding 37, that's probably, quite likely to be considered a reversal on Bitcoin. However, the rest of the charts and the rest of the evidence, I'd say the overwhelming majority of the evidence is suggesting that it's not looking too good. And then we haven't even gotten into traditional markets yet. Okay, and this is where it really starts to get a bit scary. As you guys would know, we have interest rates decision being released in just 2 days, right? In just 2 days, there will be a decision on interest rates, which is very critical because interest rates are basically one of the main factors that determine whether an economy is going to go up or down, or the financial markets are going to go up or down. It's one of the major things. What you can see is that as soon as interest rate fears started to spark in the markets in January, these markets started to drop. And as soon as interest rates decision, or as soon as the interest rate decision started to approach in March, the markets started dumping even more. As soon as they happened, we saw a pump, and now they're coming up again in just 2 days. And so we're seeing dramatic downwards price action here from the S&P 500. As you guys would know, the Bitcoin the cryptocurrency market is heavily connected to traditional markets still, right? So although people want Bitcoin to be a separate entity that can do its own thing, at this point it's just not the case. And if you're bearish on traditional markets, which you should be because we're heading into a recession, you should be bearish on Bitcoin. That's another piece of evidence for the bear market there. Now, moving on to this further and expanding upon it further, some people would say that the DXY is at major 5-year resistance, and you'd be completely correct in saying that. However, when zooming out, you can notice the DXY is in fact broken out of a 21-year long triangular formation. It's also broken an ascending wedge to the upside, and also the DXY doesn't necessarily respect TA to the same extent as other charts. Why? Because it's driven by it's driven by the actions of the everyday person and institutions. And when we enter a recession, people don't want to be holding risk on assets. Guess what? Because they drop like this, right? They're very risky to hold during a recession, right? And so they want to be flocking into cash, which is the safest thing you can hold during a recession. It sounds ridiculous, but it is, right? Because in a recession, think about it. Housing prices go down, right? Your average disposable income goes down. Stock prices goes down. Cryptocurrency goes down. Gold might go up, kind of, right? But not everyone has the means to buy gold at this point. And so, logically speaking, the only thing you can really hold and stay safe in is cash. Although you're going to get eaten away by inflation, that's what you got to do. That's kind of the best thing you can do for the everyday person. And so people are flocking into cash, and we don't need to speculate on this. I mean, we've already seen it, right? At the same time, the traditional market started to top out and show weakness. We saw the DXY skyrocket, right? The DXY is a chart used to measure the strength of the US dollar in relation to other currencies and assets. And, it's skyrocketing, which means people are flocking into cash for security. They're scared. It's a scared market. You don't see things pump in a scared market, especially when Bitcoin is still pegged to the traditional markets, right? So moving on to bond yields, we can see this kind of effect get even worse. We can see that bond yields have returned to levels that we saw back in June 2019. And using that to apply it to interest rates, you can see that interest rates have not met that rise in the bond yields. And bond yields are very good at predicting where interest rates are going to go, because bond yields are determined by the government to kind of match the reward to the relative risk in the economy for the people who are investing in bonds, right? They want to give people who are investing in bonds a yield that is suitable to the amount of risk they're taking on by investing in the government during times of economic hardship or prosperity, right? So interest rates go up if bond yields go up. Bond yields predict where interest rates go. It's like the market's way of predicting where an interest rate is going to go. And as you can see, bond yields have returned to rates we haven't seen. Bond yields have returned to levels we haven't seen since June 2019, right? Interest rates have not done that yet. In fact, interest rates are 2% below where we saw in June 2019. And so in a weird way, bond yields are kind of telling us that interest rates need to go up another 2% to match where the market is predicting them to be, right? So interest rates are dramatically undervalued right now. And as I just said in the S&P 500, one of the main reasons why the market is going down is because of interest rates fears, right? And recession fears. And so if interest rates need to go up another 2%, at least at the moment, you know, those fears aren't going to be squashed anytime soon, which obviously does all it can to do to negatively affect the state of the mind on Bitcoin and the state of how Bitcoin looks. Because Bitcoin, unlike it or not, is pinned to those traditional markets still, right? I know the end goal of Bitcoin is to be independent. However, it hasn't reached that end goal yet. Why? Because the vast majority of people who buy Bitcoin own stocks, and the vast majority of people who own stocks are selling right now, and hence they're selling their Bitcoin as well. Right? It's not an independent market yet at all. In fact, it's very, very, very pegged to traditional markets. You can bet with about an 80% accuracy on any given daily candle that if the S&P 500 goes up, Bitcoin goes up, and vice versa. So yeah, it's really not a individual market, and treating it like it is irrational. So I suppose to sum up this video, and before we get into the comments section and Twitter, to sum up this video, what we can say is that although we are primed for a bounce if we hold 37k, and we should definitely be watching that, right? Because I'm trying to make you informed of the bullish scenario here. If we hold 37k, we're looking good, okay? Although that is the case, it just doesn't look likely that we'll hold 37k, right? Do I hope we do? Of course I do. I make more money that way, right? But unfortunately, the evidence is leaning more bearish at this point. Now, we have to keep an eye on 37k, obviously. I hope we hold it. I really do. You know, it just doesn't really look likely at this point. So let's move on to the comment section thread. Okay, so GBX Music Channel asks a question, or says a statement rather. I think we'll keep going down if the stock market keeps going down. At this point, you should really try to avoid altcoins and stick to the big ones. He's got 100%, you know, he's 100% correct there. Now, I've talked about altcoins quite extensively in the past. Altcoins get absolutely hammered in a bear market. If you're planning on holding altcoins in a bear market, I highly, 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 highly suggest you rethink that opinion. Now, the problem is you've waited very long. Now, if you've been holding them since November 2021, you need to really ask yourself if it's even worth selling anymore. But I need you to understand that in 2018, right, this is a very good example. In 2018, out of the top 100 altcoins in January 2018, only a dozen and a half, so 15 of those returned to their all-time highs in later cycles, right? So 85-ish, you know, roughly, out of the 100 top altcoins in 2018 did not return to their all-time highs ever, right? And they're probably not even recognizable to this day, right? So that's just an example of how much altcoins get hammered in the bear market. People literally forget about them. You know, some altcoins only gain traction because they're new and they're marketable as something that's brand new, fresh in the market, be the first one to get in. You know, when you have, 4 years of track record on altcoin, it doesn't really do much. You know, it doesn't get picked up very easily anymore. It's lost that marketing point. Now, as to the first part of your question, you said, I think we'll keep going down if the stock market keeps going down. Now, what's interesting to note about that, and I agree with that. However, it's not really like that. The stock market Bitcoin doesn't go down because the S&P goes down. They go down together. They work collaboratively because people who hold stocks generally hold Bitcoin and they're selling at the same time. Same with institutions. You know, when institutions are de-risking from the economic markets or financial markets, they see Bitcoin and stocks at the same thing because they're connected, right? They move the same. And so they see them the same, and so they sell both at the same time. That's generally, not always, obviously. There's some companies out there like MicroStrategy who just buys regardless, and I'd see that as a stupid thing to do, to be honest with you. But yeah, I think it's important to remember that, Bitcoin's not going down just because stocks are going down. They're moving down together because of the same reasons. I think that's a better way to look at it. But, it doesn't really change the outcome, I suppose. So RR29 asks, or says, absolutely love the videos, man. Been following you since 2021. I appreciate that, mate. What would you say is a so he says, basically, what would you say is a realistic expectation for market gains in the next cycle? He asks if 10x gains are possible from the bull market bottoms. To that, I would say they certainly are. Now, from 2013 cycle to 2017 cycle, we saw returns of, say, this is speculation, by the way, but it's interesting to look at. We saw returns of 120x, right? From a 2018 bear market bottom to the 2022 top, we saw returns of about 22x, right? So you can see a massive diminishing returns there. Now, you're asking if we will see a 10x. Now, 10x would be, suppose we reach 23k or 24k. A 10x would be taking us to around 230,000 USD. I think that's completely possible. This is what it would look like, right? It would take us to about this region here. I think that seems possible. Now, again, that's just speculation, but I think that's realistic to assume. We had 120x. I mean, if you looked before here from the first halving, right, we had way more than that, like thousands of x. We had 120x, we had 22x. I think we can assume that 10x would probably be a reasonable occurrence. Harvey Williams is hitting us with some facts here. Now, a lot of people would say that, supply on exchanges is constantly going down. How can you be bullish? How can you be bearish right now? Supply's at all-time lows. There's going to be a supply shock. And although you might have a point when you say that, it's interesting to note that the vast majority of the supply changes we see are due to the inner workings of an exchange. Why do you think the supply is dropping so much right now, right? It's because exchanges understand there's a bear market, understand there's a reduced demand for their coins that they're holding in their hot wallets, and for the sake of security, and when they get hacked and stuff, they lose everything in their hot wallets. For the sake of security, they're moving all of that into cold storage, right? It's not necessarily people buying and institutions buying that are all buying all the Bitcoin and putting it in cold storage. Like, yeah, partially that might be the case. It's interesting to note that exchanges are, generally speaking, one of the top holders of coins. And so, of course, they are the ones who are controlling whether coins are on exchanges or not, right? They have cold storage just in the same way that institutions and retail does. So, again, this goes into on-chain data. It's very easy to manipulate on-chain data to make it match your bias. But once you look into it for a few minutes, you understand that, hey, maybe it's not super bullish because the numbers bloody going down on exchanges, right? There's obviously way more to it than that. If it was super bullish, the price would be going up. It's not. It's going downwards. Okay, and I wanted to end off the day with a bit of comedy here. At least I like to call it comedy because it's ridiculously hopium-based analysis. Now, this is Crypto Rover here, one of the most despisable people on crypto Twitter, unfortunately, who just posts brainless charts 24/7, and he's posted another brainless chart here, so get ready for it. We've got a bullish divergence on Bitcoin of a daily chart. That is correct, we do. However, you're not bringing up the vast majority of the information that is relevant to the average person. And you also note that he drew his bullish divergence wrong, right? If I'm going to go on this chart and draw a bullish divergence, I'm going to draw it properly for you to show you what it actually looks like, right? The bullish divergence is stemming from all the way back here on April the 11th and trending upwards, and we can do something like that on the chart. However, he's just completely missed that and just drawn it from the last 4 days. Just goes to show that these people don't really know that much about technical analysis, right? So we're using these people, a lot of people would use them for information on TA. It's like they don't even know how to draw a bullish divergence, one of the most simple aspects of TA, one of the most simple components of TA. It's like, how can you trust these people that much in the future? And then moving on, we've got a little bit of a absolute gold mine here, absolutely quality content. Guys, I just wanted to say that if you ever see me doing videos like this in the thumbnail, please go ahead and hit that unsubscribe button. I'll catch you in the next video. Thanks for watching.